Hi everybody, welcome back to Crypto Mainly. Thanks for tuning in. My name's Lee. I hope you enjoyed your nice long weekend, bank holiday weekend. Just going to jump straight into the content today. Lots of nice things happening, lots of interesting things. So let's get straight into the content. Okay, so we're still in this this falling wedge, which, as you know, is a 68% chance of a bullish breakout. So it's 2/3 of the time the price will break to the upside from here. A little bit concerning that we didn't actually get to the top of the wedge before we started to roll over. But not the end of the world as long as we're inside this pattern. We may come back down to retest the lows here before we get the actual bounce, which gives us the strength of the move that we need to actually break through the resistance. If we do break to the downside, guys, and we've got a measured move there down to around the sort of low 30s, sort of 32 to 34. But there is going to be some resistance, some support rather, on the way down there, sort of mid 30s. So let's see how things go over the next couple of days. I've just written this on here. So I've got a bullish option as the falling wedge. The bearish option, as you'll see, I've made the note here of the the head and shoulders, which it is a possibility. So you've got the left shoulder, the head, and the right shoulder there. So that is still a possibility, and we've also got this unknown entity which I've put here, which is to do with the FOMC meeting, which is happening on Wednesday, which is obviously tomorrow on the 4th of May. So lots of fundamental things which are going to go into the mix of price action for this week. So there's bound to be some volatility, and just be aware of that, and just be cautious is what I'll be doing personally. So just have a look at Ethereum. Ethereum, it's a little bit concerning that Ethereum did try to break down through this support, but we are still, much like Bitcoin, we are still in this wedge pattern here. So the chances of breaking to the upside is 68% chance again. Falling wedges tend to break to the upside, so let's watch out for that. If we do break down below support here, if we lose the support and we start to continue downside, then we are likely to see that down to this level here. So the lower part of the wedge, if you like, which is, let me just mark that on there for you so we can put that on there as a point of interest. That one there, that low there. If I can get the magnet to get to the right place. Oh, I find the magnet so frustrating. It always seems to skip where you want it to be. I don't know if anyone else has a problem. If any of you've got a solution to this bloody magnet going in the right place, then I'd appreciate it if you've got any fixes for that, because it drives me up the bloody wall half the time. Anyway, moving on swiftly. So that'll be 2160 is the lows of the range. So if we do break down, we're likely to see the 2160. I mean, if we do, I don't think that we will personally, but of course we've got to go by what the chart tells us. So if we do break to the downside, then you would be expecting a measured move. So on the conservative side, you would normally take the measure from the open end of the wedge, but just to be on the conservative side, in the center of the wedge here, you'd see if the breakdown happens from here. You'll notice that that the move actually is the measured move, if you like, is actually down below 2000. But I think that we'll only get when you get measured moves like this, a lot of the time you only get about 75% of the measure of the move. And as you can see, that would line up with the bottom of the wedge. So I could see us finding support somewhere between sort of 2020 and 2200 if we do break to the downside. But you got, guys, you know my thoughts on that. I think that we're shaping up for a nice alt season. So I'm not, I don't think personally that we're going to see a breakdown. I think we're going to see a break up, and then we'll see a retest, which will worry people. Maybe even a quick wick below support, and then carry on up into the alt season. Incidentally, guys, some of you will be wondering why this top dotted line is here. And basically, this is a projection that I was making on the Ethereum price when we were all the way back here. So back at the beginning, sort of January time. We saw that the price action starting to unfold here, and as you can see, if I make that a bit clearer, you can see. So I started to make the projections of what price would do with Ethereum here, And I mean, it's not exact, but it was an early projection from months ago. So as you'll know, price action unfolds on a minute, on a sort of hourly and minute basis. So you can see it wasn't a bad estimation of what was going to happen. This rolling over here, didn't expect for it to roll over quite so far. Expected it to come down and find some support along this descending support. Along this descending, which would have been support then. So breaking through the resistance, coming up, and then coming down, finding support, and then taking off. But didn't expect it to actually keep bouncing and coming all the way down to the lower supports here. But and hence the reason now we've got this projection, which will still take us up into this zone, and this zone is still where I think we'll see our summer alt season. I think is still going to be in this range. Here, and the reasons why for that. So if you've watched the previous videos, so this is a chart that we've been watching for a while. Incidentally, guys, the channel's only been going since the 20th of March. So when you look at the number of subscribers, just 200, and I think it's 200. Let's just have a quick look. Where are we? Subscribers, 217. So it's coming along nicely. So thank you very much. Each and every one of you. I appreciate you taking the time to like, subscribe, and press the bell for notifications. I do appreciate it. Thank you very much. And, hopefully I'll provide some value along the way and help you to protect yourself and possibly protect yourself at the bad times and possibly make some money in the good times. So hopefully that's what we've got to look forward to. But as you can see, guys, this was some of you will remember, most of the people on social media were looking at this triangular pattern here. We had established that this actually was a rising channel, and we should be watching for some kind of movement and consolidation inside this pink channel before we got the rejection and the price to actually come back down. So I know that we managed to save some people a lot of money from this move and protect some of you from that big move there. So I'm very pleased about that. So and thank you for providing me with the feedback for that, because of course without you feeding it back to me, I've no idea that I've managed to help any of you, and just helping one single person for me makes my day. So that's what we're looking at, guys. You can see we spoke about the measured move. There was like a head and shoulders pattern here. We spoke about a measured move coming down and finding support somewhere here. We've got a price that I've marked there at just under 37,000, so 36,900 was an intersection that we thought we might come back down to, back in these days. But as you can see, where it's taken some time for the price to actually start to come down here, that obviously the support is ascending. So you can see that actually the chances of coming down to these lows are getting less likely as time goes on. And I do think we're due for the breakout of this wedge pattern, and we're going to start to see continuation upwards. And going back to the Ethereum chart, for those of you that have been watching the channel for a while now, you'll know that this is like my overall view of what's going to happen. Is that we're going to see something like this, where once this is out the way and we've got rid of this Wyckoff and this bear trap scenario, is that we'll see price action come up to the top of the channel, perhaps possibly come back down and retest. It may be that we bounce underneath this for a while, then break out, come up to the top of the channel, then roll over. But I do think that we are ultimately going to end up in the summertime. And when I say summer, I'm talking about June, July, August time. We will end up in this price range up here, which is somewhere between $58,000 and $60,000 with the Bitcoin price. And then I think once the summer alt season is finished, we will see the price start to roll over and come back down, possibly creating new lows towards the end of this year, November. So the September, October, November time, towards the end of this year. And that will be the start of the next cycle, in my opinion, up to the the run up to the first half of the next bull run. So the run up to the halving, basically. So you get the 49% of the run up to the halving, and then you get the 51% after the halving of the bull run. So I think that from the end of this year, we'll then start to see the run up, starting, and it will take time, obviously to develop. But I think towards the end of this year, we'll see lows again, and then we'll start to see the run up to the next halving, which at the moment is estimated at sort of May 2024. Yeah, that's where this price comes from. As you'll see, the fib levels are basically measures from the top to the bottom here, so highs to the lows, and the bounce of the sort of the impulse bounce, if you like, the bullish move making its way up to this area here. I did put this chart up yesterday, which is, you know, every now and again, guys, it's really good practice to just start again. You know, look at a fresh, clean chart, have a fresh pair of eyes. My advice is always to start from the highest time frames and mark off some support and resistance and start working your way down the time frames from the highest. Always try and get in the habit when you're charting is to look at the highest time frames and then work your way down. Is a fantastic tip, if you don't mind me saying so myself, but it did take me a long time to learn that. But you know, at the higher the time frame, the more significant the moves are going to be, and also the more the more significant the actual signals are on higher time frames. So every now and again, guys, I will start on a fresh, clean chart, and I will just have a look with fresh eyes. I did this, and as you can see, this rising channel. If we take the wick lows here, you can see actually that we are still inside that rising channel, and it is a parallel channel. You've got the highs here, the wick highs at the top, the wick highs at the lows rather, and this is a parallel channel still. I mean, I know it looks as though on the face of things that we've broken down, come up and retested. So, you know, when I say that, I mean, if you look at something along these lines, you know, where people were looking, myself included, at this type of you know, rising wedge pattern here. So you've got the lows here, and it looks like we've broken down, come up and retested and rolling over. But in actual fact, on a broader picture, you can see these two dotted lines that I've highlighted here. Incidentally, if you look at weekly time frame, those are actually the highs and lows of this weekly range here. Okay, so can you see that in the center there? You've got the series of highs and lows where the candles with the same opening and closing. So that's significant support and resistance lines here, and I thought that was quite interesting. When you add them on to this smaller time frame, you can actually see that we came back down and tested the lower one, but we haven't actually broken those yet. So we haven't broken weekly support yet. I have mentioned before about breaking weekly support and you know, going back in time, my views on that, because if you recall, if we look at this area here where we had the Wyckoff patterns the last time, if we go to a weekly time frame, quite sure what happened there, but anyway, so yeah, last time we were looking at on a week, you know, weekly time frames here, you know, we were looking at this Wyckoff. This was the Wyckoff pattern that we were looking at before in my trading group. I'm just going to go to a weekly time analysis. What is going on? Yeah, so if we look at a weekly time frame here, as I said before, you know, I was looking at this on a daily time frame. You can see that this was looking at a Wyckoff pattern, and as I've said in the previous video, I was looking at this support level here. On a weekly time frame, which of course is significant, and you'll notice, guys, that once I keep saying guys, but I should be saying guys and girls. Just interestingly, guys, you know, we've actually got 30% of the audience of the subscribers are actually 30% female now. So thank you ever so much, ladies, for joining us. Usually it's a male-dominated crypto world. Don't know why that is. You know, from an intelligence point of view, ladies tend to be you know, a little bit sharper than the male population, in my opinion. So you know, not quite sure why you haven't been jumping on before now, but welcome, and thank you very much for liking, subscribing and following me. That's much appreciated. But yeah, so going back to this was a weekly. You can see there's a clear support line there. We got a close below, and then we got the next week you know, dipped down even further, and then the third week even made new lows. Now, because we're coming into May now, that could very well happen here. Again, you know, May is traditionally not a very good time for traditional markets, and you know, that could spill over into the crypto world. And if it does, you know, then and we start to see, you know, another couple of weeks of price action coming down and down and down. By the time we get down here, you know, the market will be exhausted, and all of the sort of bulls and things, you know, entirely will all be out of the market completely, and everybody will be bearish. And generally that's the time that things, if everybody in the market and social media and everything else, which is already happening to some degree, are all either bearish or bullish, you tend to see the market does the opposite. And I've already noticed that some of the people are actually, already, on Twitter and social media and things, you can already see that a lot of the influencers and things are already very, very bearish. So yeah, let's hope that that'll have an influence on the market. Okay, I mean, obviously you can't go by that as like a precise back-tested formula, but it does tend to, if you look back through history and things, you look at the fear and greed index, for example, that's a good indicator of exactly what I'm talking about. But okay, so let's go on from this. So bullish divergence here. So you've got the low here, and you've got the lows here on the RSI. You can see that the price action is creating new lows, and on RSI it's creating higher lows. So this is a bullish divergence, which would suggest that once we break from the from this wedge, is that we're going to get quite an interesting and explosive move. Just moving on to this chart. This is the most recent one that I posted yesterday. I posted this some time ago, and what I'll do is if I just show you, if we ignore the bottom blues for a moment and just and the measures on here, and just look at the red dotted, the red arrows at the top there. All the red arrows were basically every time the RSI had gone above this red dotted line here. These green circles line up and depict these red arrows at the top there. And the reason we were talking about that in the trading group, in fact, that's no longer required, because we were questioning whether the RSI was here and whether we would get a big rejection like we had done in these previous moves, because these moves are 25% corrections or more. So this is where, this is the chart actually that I used to warn my group about the fact that the correction was coming, and also to protect them from this move, which did happen. So yeah, so now on we're using the same chart as like a devil's advocate. If you look at the bottom now at the blue circles there, you'll notice that the blue circles, I've put this dotted line on here, which is around about the sort of 35%, so 35.25%, but let's say 35%, just for round numbers and to keep it simple. You'll notice at each time that these blue circles, that they're highlighting any time that the RSI has come below that dotted line, or if it's come down to the dotted line and bounced, which has happened a couple of times as well. So you've got 1, 2, 3 examples there where RSI has come down and actually bounced from that 35% mark. And on each time that each measure, you've got a minimum of 25% and anything up to 35%. So each time the RSI has come down to here, you've got a positive move of between 25 and 35% as a minimum. And that's not including these two green arrows here. So these are the biggest of the moves, if you like. And as you can see, without me actually measuring it, you can see this green dot line is this base here. And you can see the size of the move that came off the back of that. And the same here. That's this area here. This blue circle here is this area here. And you can see again the size of the move that came off. So these two I haven't actually measured, but you can see for yourself the size of the move that came off the back of the RSI bouncing off 35%. Even some of the smaller ones here where you've got, where it fell below, they don't look particularly big if you don't put the measure on there. But if you measure the wick bottom to the high, that's a 25% move still. And the same applies here, between 25 and 35% on each of the moves. And what you'll notice is that we've not only tested it once, twice, but 3 times. The price is coming down. The RSI is not breaking down below 35%. The price is coming down. The bullish divergence is becoming more and more powerful. And this move, when it happens, is going to be a positive bullish move, in my opinion. And I think it's going to be an explosive one that perhaps takes people by surprise. So let's hope for that, guys. Let's hope it's something along the lines of this move here or this move here, which will lead us up into the sort of mid-50s, which will be in line with what I'm expecting for Ethereum and also the alt season to happen in the summer. Those are my thoughts, guys. On the face of things, if you look at the charts, they do look quite dreadful. But when you start to look at the indicators and things, I mean, I always think about this, guys, you know, just keeping it simple, which people tend to forget. So, you know, obviously there's a lot more to it than this, but let me just, I always find it amusing on the basic principle. Okay. Let's talk about this. I'm just going to scribble this out quickly, guys, because you'll get the idea, but you know, I don't need to go into too much detail. Okay. Okay. So when price is here, you know, you don't look to be buying, you look to be selling. Okay. And when the price is here, you don't look to be selling here. You know, buy and sell. This is the way that new people to the to the crypto space work. They panic at the top. Or, sorry. They panic at the bottom, so they sell at the bottom. Okay, and they buy at the top in FOMO. But this is not the right way of doing things. Okay, it's the other way round. This is where you should be thinking about selling, and this is where you think about buying. And I know that's very, very simplistic, but guys, don't forget, the further that this goes down here, you know, there is a point when support breaks, okay, but we are a long way off from support breaking yet. A long way off. And obviously things change if support breaks, and things change if resistance breaks. But on the general, you know, in general terms, the amount of rejections that you get from a resistance line or bounces from a support line, there's only the one that it breaks through of probably 8 or 9 different attempts at breaking through that support or resistance. So think about that. Even like statistically speaking, you know, if you get sort of 5 or 6 tests of a resistance or support, generally it's broken at that point, if not before. But if you think about it, you get, you know, 1 in 5 of chances or tests of resistance or support, 1 in 5 will break through. So just on that basis, if you are thinking about selling, you know, buying at support and selling at resistance, you know, this is the correct way to be thinking about things. Okay, guys, I'll just leave you with that thought, and I do appreciate you watching. I know I do waffle on a bit, but you know, I try and help show you as much as I can, which has been sort of my, you know, what I've learned over the last 3 to 5 years, and I do try to cram a lot into the videos. But I'd like to think that if some of you follow the channel for long enough, is that you'll learn some things which will actually help make a difference to your own lives. I generally hope that that's what it is, and that's the only reason I started the channel, is so that I can help people or maybe make a difference to, you know, some of you in the type of lifestyle that you have. If you decide that you want to take up trading for yourselves, but obviously make sure you learn the craft and you sharpen your skills. You do lots of back testing and do your own research before you put any money into the markets. As you know, guys, I'm not a financial advisor, so I can't give financial advice. But entertainment purposes only. Let's hope that you pick up some new things and learn some things along the way, and you can make use of them yourself. All the best, guys. I really appreciate you all, and always remember, take profits and buy something real. Apologies for the quality of the sound yesterday. I will look to sort my microphone out. Hadn't realised I had a little battery in there. As you know, guys, the channel is very new, and you know, I'm learning every day. And one of the things I learned is that actually my microphone has a small battery inside it, which I need to replace. So all the best, guys. Anyway, take care. Speak to you soon. Bye now.